Hey everybody, welcome in. This is me up here in the corner. Hey everybody. A little bit different than normal. This is the second time I'm doing it this way, and we're going to go through another tool, show you how you can create edges in the world. Let me put myself somewhere out of the way. How about down there? And we'll open up at the end to some Q&A as well. But days like today are classic reasons why you need tools, because boy, are things volatile. Looking at the markets right now, we have, Tesla took it in the shorts, down 20 points. The earnings call was kind of sad and depressing. And of course, that rattles Wall Street. And then we have, so Tesla falls 9%. Solana goes up 8%. It's kind of crazy. Bitcoin just hit 28,900, which is a really good, looks like it's going to have a strong day, strong night. And there's a whole bunch of other stuff. So we're going to jump in and talk about a lot of these different tools. Now, one of the things, and shout out to anybody who is here in London. So this is for you. It was 1991 where I first was exposed to mean reversion trading. And the rest is history. So here we are, sharing with you a lifetime of secrets, and we're going to walk through what I believe is the world's best tool for mean reversion pair trading. There's stuff out there, but if there was something good out there, we wouldn't rebuild something. So that's just not how we work here. So I'm going to go through a quick deck first. Then we're going to go through some charts. We're going to look at Bitcoin. We're going to look at Solana, CleanSpark, Google, Meta, Render, and we're also going to look at a surprise pair too. We're going to look at Solana Cardano pair to show that it actually works for pairs too. So you can actually make money both ways, kind of like PTOS we did last week, which was very well received. And anything I say is not financial advice. As you guys know, it's edutainment, and this is the only place in the whole world you can get content like this. Now, drop a comment below. I was thinking about calling this either TA Thursdays, like TAT, or Tool Time. Let me know which one you prefer. All right, let's talk about mean reversion first, what it means. Well, basically, it's the assumption, and if you've heard this channel, you hear me say all the time, everything mean reverts. And that is the whole premise of the idea that the asset will not go up straight or down straight. It will go up and down and up and down and up and down over time. And in simpler terms, if an asset, whatever it is, crypto, stock, indexes, currencies, if it is significantly higher than its historical average, it's expected to drop. That's just what happens. Unless, of course, you got a very special asset. And if it's significantly lower, it's expected to rise. It's that simple. And the best things in life are simple. So why do you use mean reversion trading? Well, it can help you identify overvalued and undervalued assets. I'm like, I consider myself kind of like a value investor in disruptive assets, if that even makes sense. But I like to buy them cheap. That's why I always say, get in early, get in hard, especially when they're very oversold. And then mean reversion also can help traders generate profits when assets revert to their mean, kind of like PTOS last week. A lot of similarities here too. And mean reversion can also be a relatively low risk trading strategy. So a simple visual of what it looks like. Imagine, and it's always good to be in assets that go up over time unless you are a permanent bear on a certain asset, or the asset is going to zero. There's many of them out there right now. There's things like zombie banks, the zombie car companies, the zombie retailers. You can have a field day in these things if you like, but be careful. But anyway, I like things that kind of go up. I find them easier to play. So if you imagine this as a trend line, you could have that trend line as a 100-day moving average or a 200-day moving average. That's a black arrow in the middle. The price oscillates above and below, above and below, above and below all the time. When it's above the mean, it's overbought. When it's below, it's oversold. It is that simple. Now, the tool, really, a couple of things before we jump into the charts and then everything will seem very logical. It really is to identify extremes. Last week, we covered standard deviations. We'll be looking at them again this week. There's a lot of math in the models that we build and present the data in a TradingView interface, so it's very easy to understand. It's key as well to identify turning points. So the trend could be down, but it may not be a signal yet that it's bottomed or turning. That's going to be key. So think about turning points as a very important part of your strategy too. Also, watch the standard deviations. And we have a thing called noise suppression that cuts out a lot of signal. And you can also toggle your standard deviations to find less signal, but make sure it's really at peak moments. And watch the moving averages, and the trend is your friend always. And this tool, it's actually it's a four-legged stool, but mean reversion is one of the key tools in IADSS. That also includes optimized trend, a trend model of the backtest, a Confluence model of the backtest, and of course, mean reversion has a backtest as well to save you a lot of time and energy. All right, so this is kind of what it looks like, and this is a busy version of where we are. This is an asset today. If you go back over the whole year, you will never, just focus your eye on that little pink chart. That is the mean reversion. And guess what asset this is? Yes, this is Tesla today. It went completely off the reservation, multiple standard deviations away from the media because of the earnings call. And what does that tell you? Did anything significantly change with the business today? No. Did we hear Elon say things like it's going to be the biggest company in the world by far? Yes. Are they the leader in AI? Yes. That's all you need to take away. The rest is noise. You know, Wall Street saying, oh, I want all the earnings now, and I want a PE ratio of this, and everything else is just... Anyway, play for the long game, but this helps you identify those pico moments. Now, the strategies that you can use it for, there's a couple of things. One, reversion to the mean strategy. That's the core premise of the tool. And that strategy is based on the principle that prices return eventually back towards their historical average over time. And traders can use this, especially for things that have deviated significantly from their historical average, expecting them to revert back. And for stocks, you can make a lot of money doing this. Then there's the whole concept of overbought, oversold. Not too dissimilar, but this strategy revolves around the idea that assets can become overbought, i.e. too much buying, too much hype, too much inflated prices, or oversold, leading to too much selling, leading to depressed prices. This is very helpful in things like crypto, where the prices can be manipulated. This helps you identify that too as well. And then the third part is the whole divergence strategy. And divergence occurs when the price of an asset is moving in the opposite direction of a specific indicator, signaling potential reversals, trend reversals. We'll talk more about that too as well. So they're kind of the three ways in which you think about MR, and MR is mean reversion. And part 5 is backtesting magic. It comes with a backtest. We'll look at these backtest results. We'll score them all, create a sheet, and see what happens. Now, you've got to dial this in. What I'm doing is I'm using raw backtests. Nothing is dialed in. Okay, I just want to show you how this thing works. The only thing that we're going to change is time frame, whether it's the daily, the weekly, the 4-hourly, the hourly, the 30-minute, the 50-minute, the 5-minute. That's all we're going to change. And if you are trading things like on the 5-minute, that makes you a scalper or a day trader. If you're on the, say, 4-hour, or the daily chart, that makes you a swing trader. So it all depends on exactly who you are, and you can choose the time frame very carefully, and then you can dial in the model over a period of time and a whole bunch of other stuff. Here are some of the ways in which you tune the model as well. Now, again, as I emphasize, I did not tune it. I'm just using same standard neutral settings for everything, okay? And the first part, you'll have the different trading style. You can be very aggressive. Normally, when I do trade, I do use very aggressive all the time, but you can use aggressive or neutral or conservative or very conservative, depending on the asset. If it's something like a Walmart or something, you'll typically go conservative or very conservative. If it's a disruptive asset like Tesla, you typically go very aggressive, or crypto, very aggressive. Then you have your time frame. Everything is the same time frame. I just started the clock at 12/31/2018 because that's the default in the system. Backtest is on, and I have noise suppression at 30, so we don't get too many dots on the screen. You can turn that off, or you can turn on, your choice. And then the final thing is the backtest, how you do it and how you calculate and score your actual return on investments. So what I like to do is do 30%. If I allocate, say, $1,000 to invest in a certain asset, I will do 30% in the first trade, maybe 30 in the second trade, etc., up to a certain amount. And then I'll LIFO out, again, 30%. Sometimes I double tap in, sometimes I double tap out. Yesterday, I took a nibble of Tesla, and today I took a big chunk of Tesla. So that's an example of double tapping in. And LIFO means last in, first out. So the last one in is the first one I sell. Very important too. And finally, some tips and tricks. I'll show you as well how you can change the user interface. I'm a very visual person, but sometimes it can be too much for certain types of people. But we can overlay a chart on a chart. We can change the colors, the transparency, the chart type, etc., all very simply and easily. So let's jump into the actual charts themselves. Everybody, I hope everybody's doing good out there. I should be looking at the chat. Let me see. I'll be monitoring the chat as best I can. But yeah, we're going to look at a whole bunch of assets. We're going to start with Bitcoin, which has had a great day. And so here we are. I'm in my TradingView. And I'm just going to pull up a smattering of assets to get a feel for exactly where we are and walk you through the actual situation. So first of all, we can move this up and down, get a feel. What we're focusing on here is the mean reversion table at the bottom. The settings that I showed you before. Here I've got very aggressive, noise suppression 30. If I take that out, I'll see more dots. Watch this. You get a lot more signal. See? And sometimes it's too busy, so I like to turn it on so I can get less signal, but it'll choose the best actual signals. It'll suppress the less optimal signals if there exist stronger ones within the specified time. You can see the time frame, I didn't touch anything. And then the back test, the LIFO, 30%, etc. That's all you need to do. I'm using everything as a standard. And here, per this, you'll see the win percentage. It actually does change. It is dynamic as the price of Bitcoin actually changes. The price of Bitcoin currently right now is, turn this on to regular, $28,685. It just hit a little higher amount than that a few minutes ago. Anyway, let's look at this chart here. In simple terms, we're on the 4 hour. Now we need to look at the chat. Okay. Awesome. Thank you as well to the moderators who are helping me out while we do this. And I will also turn off this so it looks less busy. All right. So the top is the actual chart itself. We can turn off these graphics as well. And you can see it goes up and down. Now, if you want to overlay this mean reversion on top of the price, you can do that. But for the first illustration, I'm going to leave it under. So when you see things fall down to the bottom and you see the green dot, that's when the trend is turning back up. That is typically a buy signal. Up here is a sell signal. So you'd buy here, you'd sell here. That's simple. And then the reason we have the trend showing too is because the trend will keep you either out of the trade or in the trade. So if you follow it all the way down here, you don't buy till it actually turns to this level, trend turns, and then you buy, you go up, sell, buy, sell, buy, sell, buy, sell. It's that simple. And you can change the time frame. Now watch as we do that, by the way, the back test results will change. So let's go to, say, the daily on Bitcoin, see what happens. Here it went to 85.71%. And again, it looks a little more extreme, a little more exaggerated, but it's hard to see the full chart. So I'm going to move the bottom pane to the pane above. And then you'll see exactly how things correspond with price. Sometimes it's perfectly in sync, sometimes it's not. Again, the trend is your friend. For example, here it says sell, but the blue trend keeps you in the price still about here. And then you get out. Then you get the buy signal down here. You wait for the trend to change here. You get back in again. And then you sell up here when the trend changes, but it's still blue, so you stay in the trade. It's that simple. But you can see, let's go back to the 4 hour and check Bitcoin. 85.77. The 4 hour is better than the daily. Let's go to the 8 hour to see if that's any different for giggles. 92.74. Okay, that's a lot better. And so that might be the optimum one. For example, if we go to the 15 minute, sometimes I like the 15 minute too. 91.95. That works as well. Here, red mark, sell, get out, green, get in, get out, no buy there because there's noise suppression. And here as well, just so you can see, you can move this up and down depending on how you want to be in the actual chart. where you want the price action. Sometimes it's nice to align it on top, and then you can see much clearer where things are. For example, this buy signal, slightly late here, but it works real well. And again, that blue trend keeps you in the trade all the way up, so you'd still be holding. Again, this is, by the way, it's a 15-minute chart, so we're looking, each block here is a daily time frame. So we're looking at 4 days going back, and look at the volatility back before. It's kind of interesting. So that's Bitcoin. It has something for everybody. Sometimes also I trade the 5 minutes. Let's see how that is. 90.18, not as good as the 15. 15 is nicer, but same thing. Let's look at Solana. Solana had a big day today, shot up quite a bit. Again, you can see here how you can kind of dial it in. Down here, green, going back a little bit, green buy signal, red sell, green buy, all the way up, red sell, all the way down. You stay till here, you buy. And then this one kind of would fake you out. So this is where you would put in something like a stop loss. If you're not sure, you would not trade. Now, the other thing that you can do too, which is very important, you can dial in the actual settings. So let's do that. So we focus more on having far fewer signals, far fewer trades, but much more accuracy. So what we can do here is go here, go to the style, and we can change the level to say minus 0.5, plus 0.5. And you can see the bands are 0.6, 0.5. And you can dial these in, and this will tell you to wait. You wait for these moments, like we see here, for the price to be outside of the green band to get that green dot. So this is a buy, and up here is a sell. These are buys, but you wait for the trend to turn, and up here is a sell. So this way, all these little noises, like these little green dots here within this range, you can wait for it to be outside that green band to buy, wait for it to be on top of the red band to sell. Real simple. You can see here as well, check Solana. It's 100% win rate using mean reversion on the daily. Let's check the 4 hour, see what that is. 88.4%, not as good as the daily, but if you just use this to float around a whole bunch of assets, you can find good times to buy, optimize your settings, and be as greedy as possible. Dial that test in. And again, I didn't change any timeframes. It's all back to 2018. Now this next one is render. You see here, a render looks like a lot of noise, a lot of stuff going on. The win rate is 85.04%. We're on the 1 hour. But again, once again, you see here outside these standard deviations, 0.4, this would be a buy. You wait. This one, it doesn't go outside the red band, therefore you don't sell. You wait for this peak moment up here. This is a sell. And then you wait down here. This is a buy. This is a sell. This is a buy. This is it just helps you make much better decisions when it comes to investing. Let's look at Meta, a stock that I own. In fact, all of these names you're looking at, I actually own. Therefore, I'm very familiar with them. And you should be too from watching the channel. This is Meta. Again, we're going back to summertime. Again, we can dial in the chart to see exactly how it works. ROI is 92.72%, win rate 84.95%. And up at the top, we have the trend model 2, 71%. And let's try change the trend model as well to see if we can get it a little bit better. Let's go to very tight, see if that changes. 93.75. So for Meta, you want to be on very tight and wait for those turn signals. And on the mean reversion here, let's check the settings are the same I'm using for everything just to show you. It's very aggressive with noise suppression 30 all across the board. Now here with Meta, Meta has been on the scorcher all year. It's been pretty incredible. But what's interesting to see is exactly how it conforms. Once again, big dip. The mean reversion nailed the buy. You go in here, you're outside your standard deviation. This is a big deviation from the mean, very big. And back up here, red dot, bye. I mean, sell at the top. And then you wait to get back in. Trend keeps you out from buying this first signal. And look at this big one, buy again. And then you wait for it to go. The blue keeps you in before you sell. You sell up here. And then you buy in here and you sell up here again. Again, when you have a combination of two different factors, like the mean backtest is 85% and the trend backtest is 94%, and if they're both saying the same thing at the same time, you're going to win that trade. It's that simple. Now, let's look at CleanSpark. One thing I do want to turn to here, people are asking me, why was I shorting CleanSpark when it shot up to $7? Let's turn this onto price so you can see the actual price. It went up to $7.50. And the answer was because of this tool. The Mean Reversion told me, look at this. There is no place in history for years that CleanSpark went so high in the Mean Reversion. So this was a clear signal for me that the price is going to come down. Yeah, they put a little note in there. Totally overbought. It just could not go, especially when you looked at the fundamentals behind the business. Now, it was a great rampage from like $2.75 all the way up to $7.50, but it was going to come back down to earth, and that's exactly what it did. And then I doubled my bag here about 1 or 2 weeks ago. I can't remember the exact date, because it was down here completely oversold. Nothing goes straight up and nothing goes straight down. This is why you need these tools to play. By the way, the red line there is a 200-day moving average, so you know where the trend is. And this is where I bought. I bought when I waited for the trend to turn, when it flipped blue here. And if you look at the win rate for the trend, it's 77.78%. And for the mean, it's 85%. All right, let's look at Google, and then we'll look at a first pair, and then I'll open up some questions and make sure everybody is tracking with what I'm saying. Google, super interesting here. Clear buy. And again, it fired a sell, but it may be a little bit premature up here at this level, because Google only went up to, I've got to turn the price on here again. So we can see the price. Google only went up to about 127, but it's been very choppy for the longest time. It didn't run with the AI narrative that many would have expected it to do. Anyway, here is a great buying opportunity. You can see the mean reversion. Let me zip this up so you can see this little green dot. Again, the trend keeps you in. You get in here, and it only bounced a little bit, so you didn't actually get to sell. And you get a double tap in to buy a little bit more if you wanted. And then it shot up. This is a clear sell. Very 2.07 standard deviations away from the mean. And then it mean reverts back down to here, outside the band. You get back in. Up here again, get out, get in, get out, get in, get out. It's that simple. The win rate here on the mean backtest in the 4-hour for Google is 97.06%. And the trend is 92%. This is a killer combo. Let's switch it up just for giggles. Let's go to the 1 hour for Google, see how it performs. 90.2% and 89.55%, not bad. Let's go to the 15-minute. 83.8 and 94.08. It's still not bad too. You can see the regularity with which you can trade this with great frequency. You can trade like once a day. Buy, sell, buy, sell. Wait 2 days, 3 days, buy. Wait 2 days to sell. Buy, sell. Or you can dial in the mean reversion bands, the standard deviation bands to your optimal setting. But again, there's so much opportunity, there's so much alpha all the time. Stick with the 4-hour, because when you're looking at a large number of assets, there'll always be a chance to do a trade somewhere every single day or every single week. All right, last one I'll look at, because I often get the question, does this work for pairs? So this is Solana against Cardano. And you can see it's been a rocky road. You get huge swings in deviations from the mean for pairs, because they can both run at different times. So obviously we had the September to November rampage for Solana back in 2021. So it completely outperformed Cardano, then fell back to earth. But this was another buy down here, and then a sell up here. A buy down here, a sell up here, a buy down here, a sell up here, and a big buy down here. You can hardly see it. It's hidden. It's so far down. Great buying opportunity. Sell. Just made it quite a bit above. And again, just wait for it to be outside the bands, and then you go. Buy, sell. The trend keeps you in the trade, and on and on. But if you look at year to date, you'll notice there's been a lot of action. Solana has completely crushed Cardano. It's up 154% more than Cardano. So It works for pairs if you're pair trading crypto, pair trading other assets, you name it, it works really well. Remember that this pair trading though method here using mean reversion is not the same as pair trading on steroids that uses inversely correlated assets. So this is the way, if you do, because I get the question as well, I don't want to trade Tesla and Teslac or BTO and BT. I want to trade Cardano and Solana. This is the tool for that as well. So I'm going to now open it up to some questions, and thank you as well to the moderators in the chat. Let me make sure if this pops up. Yes, it does. Okay, first question from Farafin. How much do you need to be trading with for this to pay off? Well, first of all, you need to have some background in TA. If you go in cold and just want to do it as a part-time hobby, I don't recommend that. It does take a visual mind. The models do all the heavy lifting for you, and the backtest does all the super heavy lifting. I always go back to the story of how in the 90s I used to spend the weekends calculating backtests on huge spreadsheets using things like Lotus 123, if anybody's even old enough to remember what that is. This is before Excel and Google Sheets, and it took like literally 12 to 20 hours every weekend. Now it's all instantaneous, so you can test your strategy, test your time frame, test your settings, and dial it in. But to have this in the market, I recommend you need to be playing with at least $5,000 to $7,000 to play in the market to justify the price. So I hope that helps. It's like DCAS. You need to have about $1,200 in the market to justify the price. Next question is from Daniel. What makes the red and green boxes move up and down on the mean reversion chart? This is when you dial in the standard deviation. So let's do that again and make sure nobody missed it. I'm going to jump. Where were we? This is Solana. Let's go back to a simple straight asset. Let's play with Google on the 4 hour. The ratios are very high, 97 and 90.87%. But let's tune in this just so we see the noise. So when we are going to the actual style, we'll move this to 0.6 and minus 0.6. So you get a kind of a range, and you can change this any way you want. Let's make it a little more aggressive actually and determine exactly what our trades look like. Let's go to 0.8 and 0.8. So for example, Tesla today nearly hit 2 standard deviations outside. So what we can also do as well is we can turn on more noise suppression. We can take this up to 60. So we get even fewer signals. So what I'm looking for here, I think it reset my, let me check the style. Yeah. So noise suppression, that tweaks this. So let's go to 0.65, 0.8 and minus 0.8. Now we see the range of where we can actually trade. Let's zoom in on this. So here, for example, what we can also do, I didn't show you this, but if the backtest gets in your way, we can move it to say the bottom left. So it kind of gets out of our way and we can see the dots. All right, now because we moved those ranges quite a bit, we're only going to see less signal. So this, for example, well, some of them are huge. This is a big sell signal up here, but it's premature and the trend will keep you in. You wouldn't sell till this level here, which is 126. Then there's a little dip, but that dip doesn't get you a buy till about here, which is 122. So that's only $4 in that trade. It's not a big one. But if you look down here, this is a very strong buy signal, very big standard deviation, and that would get you in at 118. And remember, Google did trade in a very tight range for most of the year, between that kind of 110 and 130 for the longest time. So it is tight. It's not volatile like things like Bitcoin. But when you dial these in, you move these out, you can ignore the green dots inside the green band here and ignore the red dots inside the red. And you only trade for those ones that are outside the band, no matter how high you want to go. Let's go even higher and we can force our discipline. Oh, actually, just moving, I just realized moving those bands up moved the win rate to 99.08%. So again, the less signal and the more pure the signal, which means the more standard deviations they are from the mean, the higher your win rate. So I hope that helps with that question too. Daniel. Next one is from Donkey Shot. Can you apply to the XRP chart? Like now, I can. All right, let's do that. Let's do it. Let's go to, hang on. I've got all the cryptos, everything here. This is the top 100 cryptos and pairs that I curate. Let's look at XRP. So we pull the indicator in, invite only script. We'll go to mean reversion. It's right here. And wow. Oh, Lordy. So you can see here, well, we're on the 5 minute, but XRP has pumped on the 5 minute. Let's look at the, let's do everything from scratch. Okay, so you can see what I'm doing. Neutral. I'll go very aggressive because that's how I like to trade crypto. Turn on the back test. And I turn this on so I can calculate my typical way of trading. 30-30, and this is LIFO. And let's see. So the win rate is actually 77.25%. The ROI is negative because we have more buys than sells, so we haven't sold out of a lot of positions. But let's also do something else. Let's change the time frame from 26 to 2023. 01. So we start at the beginning of this year. So because a lot of stuff has happened, and you can see here, win rate's still kind of the same. I'm going to turn off my Confluence model. That's a separate model altogether. And I'm going to overlay this on top of the chart like we did before. And you can see here, wow. So what you're looking at is a crazy move in standard deviation. What I did before too, I didn't show you, but the style, not just a line, because when you've got too many lines, it gets kind of busy. I like to look at either a histogram like this, or I like it to be transparent. I go to the area, and then I change the color here. I go here, I change it to purple. That's just the choice that I have. And I turn down the transparency. And that way you can see exactly where we are. All right, now this is brilliant because I'm so glad you said this. You can see here, the price shot up. This is 4.72 standard deviations away from the mean. And that means the price will mean revert. That means it's a fake pump. What this does, it tells you if the price is going to come down again to say 50 cents or whatever. It's not going to stay at 52 cents. And that's the 5 minute chart. Let's take the same approach and let's look at the 4 hour and see if we can beat 77%. 94.4%. Here it is again. But let's go to the 1 hour, because when you think of a 4 hour, it's like half a day. And here we are. You see that big spike. But because it happened just a few minutes ago, you need to look at a much shorter time frame to find exactly what's going on, like the 5 minute or the 1 minute. And you can see the price already coming down here. And we can turn this into a candle so you can see exactly what's going on. Okay. Actually, candle's probably not a good idea because it's got red on purple, but you get the idea. This will mean revert back down from 52 cents all the way down. So that was a very timely question, but that's exactly how it works. And that's how you won't be faked out, because the biggest mistake that people make in crypto is they FOMO in. It's like, oh my God, it's moving. And they jump in and then they get hammered. So not good. Let's go back and see. Bitcoin took a little bit of a dip right now. And by the way, I love doing this. I just started doing this. It's really fun. So Donkey Shot, thank you for the XRP chart. Michael Chiapata, how do you manage breakouts? For example, at some point, Bitcoin will break the trend. However, if we follow the indicator, we would have sold. It's exactly a brilliant question. That's why we have a thing called the OT. This is the optimized trend, which is designed exactly for the asset. So what you want to do to make sure you're following the certain trend, you look at Bitcoin and you look at it in terms of exactly where we are, auto fit, and this will keep. So if there is a huge candle, like we had that big, what was the God candle the other day? We had a few this year. Let's turn on candles so we can better see them. And we're on the 4 hour, zoom in. So you can see things like when there is a big candle like this, the trend will keep you in the trade. You won't get out till it turns here. That's when everything goes back. So you got your sell signal on your mean reversion up here. Let me zoom in so you can see it all. See how crazy it was? This mean reversion was 3.13 standard deviations away from the mean. The trend told you, okay, it's a fake. It's time for it to go back down. And it did, but only a little bit, down to here. So Bitcoin went from, well, it shot up to what, 31,500, fell down to 29.5, up, down. There's another buy signal down here. The price would have been 29.8, shot up, and here another standard deviation. Trend turns right here. You would have got out at 30,900, and then it would have kept you out all the way down to here. This would have been your next buy signal at 29,056, and it was short-lived, pump up to 30,100, and then out, sell again, and then all the way down. So that's how the combination of the tools, you've got your mean reversion and the optimized trend or the trend model, that will keep you in the trade as you go forward. Michael, hope that helps. Harley R, if you had to choose one tool, would you choose PTOS or this? PTOS, if you are I think the best way to get started if you're new to this, PTOS kind of does it all for you. It's got the optimized trend, and you just have to dial in your assets, whether it's B2 or BT or Sol 3x long, Sol 3x short, the QQQ or the PSQ, the short NASDAQ, or same thing with the S&P 500, Tesla, whatever you like. Depends on what assets you want to trade. This whole suite comes with everything, so there's a lot more bells and whistles. And it also comes, if you buy the IA suite, it also comes with PTOS. But PTOS is a much cheaper starting point, so probably start there. If you have experience and if you are a swing trader, then I'd start with IADSS. It depends. Let me see. Is there a Google pair? There is no short Google KN. No, not for PTOS. But there are lots of Google pairs. So let's dig into that one, because that question intrigues me. I'm going to, where is our Google chart? So what I have here is I've got all my pairs. Tons and tons and tons of pairs. Let's see if I have any pre-made ones for Google. Amazon Google. I got MicroStrategy Google too, which I look at as well. So which one do you want to look at first? So let's look at the MicroStrategy Google, because technically they're not co-integrated. They're sort of not inversely correlated, but you can see here very quickly, I can tell in an instant by looking at this chart, it kind of works. First of all, the win ratio is 80% and the trend is 92%. Let's go to the daily, see if that gets better. 92 and 85. Nope. Let's go to the 1 hour. 81 and 82. No, let's stick with the 4 hour for this. And the good thing, they're both stocks, so they both, have 4 hour windows, which works very well for kind of a trading day. Now, when we break this down, let's start at a buy signal. So here, again, we've got MicroStrategy to Google, so it's the point in time where you flip one asset for the other. But it would have sold you out a little bit too much. But again, the blue trend keeps you in the trade, so you're fine. You would have held all the way up to here. So technically, that's not bad. Let's get it. Sometimes it can be confusing as well. So let's put in the actual stocks behind the scenes, so you can see exactly how they are lining up, if they're even showing up here. Oh, whoops. I forgot to hit compare. Let me go back to... See, this is live TV. Let me punch up this, compare symbol, GOOG. All right, there's GOOG and MicroStrategy. So when you're new to pair trading, you need to know which one you swap for the other. And here you can see how they relatively perform. So teal is going down and Google's going up. So I know the chart's looking a bit busy right now, but bear with me. We'll do this live. This tells you down here that it's the time to swap Google or swap MicroStrategy for Google, and up top is the time to do the opposite. You swap Google for MicroStrategy, and you can see how they perform over time. So yes, it does work, but it is a little bit busy, as you can see from here. So let's go and check. Down here, a big opportunity. and that is ahead of MicroStrategy falling. Up here was the top. Actually, I got it backwards. Up here is the top, MicroStrategy is falling. Down here is the bottom, Google's climbing. Okay, let's look at Amazon Google, see if we can get better sense there. I'm going to turn this off, and here you can see the pair is down below, and it's been kind of a tighter range. I'm going to turn off the Google because Google has been beating Amazon lately. But the key thing about this Amazon Google pair that I look at a lot is this floor level here of exactly, what does that be, 0.92 shares. It's a very nice range rider. It has been for a long time. So what you can do is find the pair, identify the range that you want to trade in down here, draw a line there. That's kind of what I call a floor. And the Amazon Google pair, whoops. And then the roof, kind of like you just call it like here. And then you use the tools to identify when to get in, when to get out. So let's go to the daily on this one. We got a 66.3% win rate on the trend, not good. 93% on the mean backtest though, which is very good. Let's see if we can beat that on the daily. 96.55, yes. So here, again, you got that range that we just punched in. So here you swap one asset from the other. You start at the bottom, turn around, go back. And this is confirmed with these signals here on the mean reversion of the pair. So yes, it works much better for Amazon and Google than it does for Google and MicroStrategy KN. So sorry for the long-winded answer. We've got to dig into this real time and get the answers. But this is a beautiful range rider, especially for this year. Up, down, all the way as you go. Next question. Vault 1, you talk a lot about a narrow focus. What assets would you stick to with the master to master the tools? So it's very, very important. I have just in full disclosure, I've got a ton of lists I watch. Like literally, I'm looking at ICE car makers, the Magnificent Seven. I look at, the old FANG. I look at China stocks, commercial real estate shorts. I look at everything, but I tend to focus on what I call my bags, things that I own a lot of and I watch all the time, pretty much 18 hours a day. So the Meta, the ETHs of the world, the Bitcoin, Solanas, pick what you like, because I actually trade multiple asset classes, and I spend a lot of time doing it, so I don't mind. But if you don't have a lot of time, find something you love, find what is your passion, and stick with that, whether it be crypto or disruption or retailers or Chinese stocks or I got a thing called the ARK worst stocks, Pacific Biosciences and Roku and Zoom and all that type of stuff. Everything is kind of in there. And I also have my macro watch list that includes, you name it, Apple, Rivian, oil, wheat, gold, silver, bond rates, money supply. That's kind of like my macro watch list. So just be very, very focused. I look at everything because I do this full time, but in reality, pick what you like. And also make sure it's volatile, because the more volatile the assets, the more fun you have with the tools. Bill Wammers, good to see you, buddy. It's late your time. If you have optimized trend model, what do you need the other trend model for? So optimized trend gives me a macro view. I use it to identify when to stay in the trade or stay out of the trade. That's really the secret, because the optimized trend model is built around the asset itself. Now, when it comes to the actual trading, and I want to find confluence between three different things, I'll turn on my Confluence model. Let's pick an asset. Let's go to pick something we haven't looked at yet. What's good? Matic. Oh, Matic is terrible. ETH. Let's talk about ETH for a minute. So here, you can look at everything. So when you have let me blow this up full screen. You have at the top here the trend backtest, 97% win rate on just following the trend on ETH. If you have 90% there, and you've got the mean backtest, 93.88% win rate in Ethereum on the daily, And then you've got your Confluence model, 100% win rate. Literally, if you have these 3 indicators going at the same time, your trend, your mean, your Confluence, you're going to win. It's that simple. So you want a green dot down here. You want a buy signal here, and it's going to be a little hard. If I turn off the trend, you'll see the buy signal. You should see the buy signal. Let's turn on the 4-hour for this so we can get more signals. Make sure the numbers are good. 75, 84, and 97. Still not bad. You got your buy signal down here. I got to zoom into this so you can see the Confluence here. So the mean reversion, clear buy, and you got the buy signal, and you got the trend turn. This is a classic example of everything being right. If you follow these, the price will go up. Now let's go find a big sell signal up here. All right, huge overbought situation. 2.7, 2.6 times away from the mean. You got the sell signal and you got the trend changing. Again, it's going to go down. It's just mathematically proven by all these models. When you got 3 things telling you the same thing, you're going to win. And that's why, that's the magic of the Confluence model. I don't want to talk about that right now, but that's where it is. So, Bill Weimers, hope that helps. And I think that's a wrap, everybody. I don't think there's any more questions from the audience. I want to thank everybody for coming, and drop some feedback as well if you like these. These are kind of very technical, but extremely powerful. People ask me what makes me successful. It's these things that the genesis behind them is 33 years of everything else. So big thank you to everybody for coming. Thank you all for being here. Thank you to the mods in the chat and all the people watching. And again, feedback welcome. Let me know what you think of this. Is it too technical? Is it too simple? Is it too slow, too fast? I'd love to hear from you. Thank you. Bye-bye. How was that team? we are only just, hang on a second, did I not finish the stream? I was in there in the chat. Yeah. I'm still alive. I'm doing responses to the chats, everybody. Thank you all. Bye-bye.